Trump Liberation Day tariffs send the world into a panic mode. Do we have something to worry about? Hello, this is Chart GPT today. Yes, Trump Liberation Day, he announced it, and obviously there's a lot of consternation going around the globe here. And let's take a listen to Trump in his own words about his Liberation Day tariffs.
My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
The nation responded quite rapidly. Here's a clip of different protests that are going nationwide here right immediately after Trump's announcement.
Huge turnouts from Washington, D.C. to Chicago, West Virginia, Utah, and beyond. Protests in nearly every state. Demonstrators pushing back on the Trump administration's economic policies.
Trump and Musk have got to go!
Cuts to the federal workforce.
Rise up!
And Elon Musk's Doge agency.
He's going in with a chainsaw. He doesn't know what he's doing.
In upstate New York, this protest went straight past border czar Tom Homan's house to call out the administration's immigration policy. And in Palm Beach County, Florida, just miles from Mar-a-Lago.
So the response was with fervor. Now, I do think the media has ginned up a lot of this negativity. However, at the same time, I do believe this is fairly organic. You can't get that many people out there with kind of astroturfing these kind of protests. They may not understand what they're protesting, but they know that the world global situation is changing, and they're very nervous, and so they're protesting because that's what people do. But let's step aside from the emotive stuff of this and get into the detail. Here's a chart here on the global GDP. There's a broken between United States, China, European Union, and the rest of the world. Of course, India is a pretty big part of that rest of the world. It's about 8%. So we can see that about 20% from European Union, 25% U.S., and about 18% there from China. So this is kind of what the global trade looks like today. When you start breaking it down in terms of import-exports, the U.S. by far has the lowest amount of international GDP, which is only 20%. China obviously is the biggest at 40%, and European Union is 30 and 35%. So the U.S. actually doesn't really import that much compared to the rest of the world. So it is interesting that this seems to be the topic of interest here. So we get into the winners and losers here. I think, and it's pretty much most economists agree that overall everybody's going to be a bit of a loser because the global trade will decline. We'll look at that in more detail later here. The trade deficit countries will be the winners, which will be, obviously, the U.S. will take a look at that, and trade surplus countries will be the losers, and obviously this is targeting China. Export-import related sectors will be the losers. If you're involved with export-import, you're going to be a loser. If you're domestic-related sector, you're going to be a winner. And it's a bit of a class war. The workers will be winners, and the business leaders will be the losers. We see that in the stock market declines. Of course, this will be short-term, and over time that may inverse, where eventually the workers will have to deal with the global trade declines. The net effect will be somewhat negative, maybe even potentially worse over time. But I don't think it'll be a huge net negative initially, even though there'll be a lot of consternations. Now, there's going to be some assumption challenges going forward here. The percentage of countries that are participating in the reciprocal tariffs, because a lot of people are already talking about reciprocal tariffs, but some of them may not. So there's a medium chance that this could balloon into even more. I'm not sure all countries will just immediately reciprocate, even though many of them are talking about it. And the percent of businesses retooling for domestic production versus stalling for policy change. Here's the problem. You get a company and so now they have high import costs because of the tariffs, but maybe they might just not retool to do the same production locally because they may wait for a policy change. So I think most businesses are going to stall. There'll be some that will switch production to local, in-house, or as we say, domesticated production. But many of them will just stall, thinking that, well, maybe the policy will change, so they're not going to go out and invest as much as they might think. And the political forces to affect policy changes, we see the protests. There's a good chance that Trump will have to back out of these tariffs because of the political realities. And there's some legal issues. Does the president have the legal authority to raise taxes? And it is a tax increase. I mean, constitutionally, that's supposed to be the domain of the Congress. So there's a lot of challenges here that may stop Trump in his tracks as we go forward. So we'll see how this pans out. So drilling a little bit further into these import-exports by region, are the regions that we're focused on here. The U.S. basically imports about almost $4 trillion out of their $27 trillion economy, and they export about $3 trillion, giving you almost not quite $1 trillion. I think that's come off a little bit in the last year. These is 2023 numbers, and you can see the China actually have a trade surplus, but most of the rest of the world as well has a minor trade deficit as well. So obviously this is why most of these tariffs are targeted at China, because of the surplus countries are going to be the ones that are a problem. Of course, each individual country will have their own story. So going further with that, the question really is, if we slow down global trade by raising tariffs, and of course obviously that will, what is the effect that will have in terms of the global growth? And I think that's what everybody is most concerned about going forward. So looking at the analysis of potential trade laws, at least in the U.S., yeah, you have to look at the elasticity of the product. Obviously, luxury goods are less important than, say, a drug that you need for your health. So there's going to be different levels of increased tariffs versus the actual loss of sales. So it kind of rounds out to around 20 to 30% price increases for that part of the economy that is import related, which could be about a 1.2 trillion drop in GDP, or around 3 to 5% in the U.S. Of course, that'll happen over a period of a year or so. I've seen estimates a little bit lower. Of course, that's less any CapEx positive. Obviously, if you're building out plant and industrial capacity, it will have a positive boost on the other side of that coin. But I would say that it's going to be around 3 to 5% over a period of 2 to 4 years if these continued trade policy continues from Trump. The much touted potential benefits in U.S. deficits being improved from the federal budget level, I'm not sure it's that great as some people are trying to make it out to be. In the year 2024, there was $1.8 trillion federal budget deficit. Even with you using the Trump calculation of, let's say 0.95 trillion divided by 2 in terms of the trade deficit, but you have to also reduce that by any potential global trade reduction. So you're talking about a potential improvement in the U.S. deficit by about 0.325 trillion, or 325 billion, which is significant, but it's nowhere going to be near to pay off the U.S. federal deficit. In the meantime, is Trump trading the markets? Is he going to reap these short-term benefits only to get all the bonds at lower rates and then suddenly reverse course? Of course, this will risk global destabilization because this is obviously trading with advance notice. So we'll see what happens here. It's a very dubious and very risky strategy, but maybe it can work. So the prediction is that the global growth GDP declines will be between 3 to 5%, and the U.S. will probably fare the best. China obviously faring the worst. Inflation is set to escalate significantly because obviously raising the prices to goods obviously raises the inflation rate, the consumer. Employment, a lot of people worried about employment, but I say initially the employment will stay steady because there's going to be a lot of capex building of local industry and domestic industry, so that's going to provide some input for employment. However, it risks leading to a stalled economy and lower employment in the out years. So how many years that's going to take, how many months, perhaps 1, 2, 3 years out, then obviously the global growth will start to grind in there once you get the initial capex build out. Stocks, after initial fall, they've already dropped about 20% already, and that probably look to drop to 20 to 50%, and then I feel they'll probably have a little bit of a rebound, and then they'll begin to stall out and have a kind of a flattening effect. Interest rates after initial fall will probably lead to higher rates because of the higher inflation rates going on. The dollar initially lower, we see that, but then I think it could rise significantly because I think the U.S. will be the winners in this trade war if it continues as is. Precious metals continue to rise potentially significantly because of the inflation factors. But the big thing, the thing is, we're playing on a Rubik's cube of the economy. There's two major risks. There's a risk of credit defaults, because obviously with a lot of the credit is based upon the growth factors, and if they decline, we could have credit defaults reverberating into a deeper recession. And let's not even think about it, but even a depression similar to the 1930s of the last century. Trade wars, political chaos leading to real wars, that's a potential as well. They always say trade wars lead to real wars, and China being the loser, they might think this might be a good time to go after other countries in the China Sea, which we've all been worried about for some time. So there's a huge risk, and this risk is leading people to be very nervous, and I think they have a right to be. We're all pawns in a big global chess game of trade policy, globalization, and Trump is trying to make a major shift, and people are worried and they want the status quo, and that's why they're protesting. Of course, on the other hand, there was a coming crash anyway, so Trump may be just speeding it up. I'm not sure the protesters really know what they're protesting. They're just worried about the change, and I think they have a right to be nervous about the change coming, because we're all playing this poker game of who's going to blink first. My guess is that Trump is going to back away from this at some point, but with his big announcements and making it a big deal, it's going to be harder and harder for him to back away. Otherwise, he looks the fool. Of course, some people think he already is, but it is what it is. In any case, take our online poll. Will the Trump tariffs effects have a positive effect or a negative? Take that online poll. Go to the description box in the links below, and take that in the blog post, and look at the write-up of the AI to see whether or not what they think about what's going on, and there's some of their predictions. In any case, buckle up. This could get wild.